Today is Monday. I'm going to do a market structure video today. And I'm going to show you guys the approach I do when I'm looking for setups when I'm trading in the Forex market. So what I do is I go on the chart, okay, and I need to know market structure. Why? Because market structure is in control of the market. They control where the market goes, and the market only goes up and down because it's supply and demand, okay? And so the only people that can move the market drastically are the smart money, the big players, institutions, and the hedge funds, to be specific, okay? And then there's retail. So most likely they're the ones forming structure on higher time frames, maybe not the lower time frames, but on higher time frames mostly, okay? And then you can see aggressive momentum on the lower time frames, yes. So here's what I do for my long-term structure. I use the 4 hour, and sometimes I'll go on the daily. And for my short-term structure, I usually will go on the 15-minute, depending on some pairs. But for this pair, it's the 15-minute to 30-minute. So I'm actually going to 30-minute, and I recommend getting TradingView Pro too to have for some extra time frames, because sometimes you can find demand zones and extra time frames. So first thing you want to do is go on the 30-minute time frame, and you want to mark. We're looking for 4 pieces of structure, and that's what I use to confirm where the market's going, okay? And so what we're going to do is we have a low here. Let me just change the color here. Just keep it simple. High, and you want to, when you write your structure too, you want to start from right to left. So I should have started up here, so that's my bad. So I would have started up here. So 1, 2, 3. So we had a high, a low, then the previous high, then we had a low, then we had a and what I'm doing is I'm not marking up all the tiny pieces of market structure that's right in between all of this. I'm marking up the significant pieces of structure kind of on the outer range. So what that means is you take your mouse when you start on the 30-minute time frame, right? You see how you can zoom in and out? What I want you guys to do is I want you to zoom out all the way, and then once you do that, then you're going to look for your structure, and that's what we're marking. We're not marking all the way in here, okay? We're marking outside of here the significant pieces of structure that form structure. We'll call this smart money structure. So we have another high here, a previous high. So in total, we do have 4 pieces of structure, but there is something quite not right. We want to see a high when we're looking for down structure. We want to see, or bear structure, we want to see a high, a lower high, and a lower low, which we had, but we did not get a lower low past this part here. So what you want to do is, I'm going to get rid of that. I want to keep marking the structure. So let's go back and look again. So we have another low here, and we have another high here, okay? So if we go back further, that tells us, like, okay, this is still a valid zone, because if you went back here, this would still be a downtrend. And then if we look over here in the current pieces of structure, past that red line, the front of the red line, nothing's changed. In order for us to have a new trend, like for example, say this trend was going up. Say the reason why I didn't break is because it was going up, right? Well, if it was going up, the only way we're going to take buy trades is if we see a break of this piece of structure here. Okay, and even if we did see that, that's not the only confirmation I'll take. I will take that if I see a Wyckoff schematic or a demand zone with an order block that has all the pieces of confirmation that I need. But most of the time, I like to see it come back in, then go back out, and then I'll look for maybe some demand zones, entry points at the lower part of this range when it actually breaks that area. But for now, we're keeping it simple, and we're not going to do any of that. So what we're going to do is we're going to get rid of what I just wrote here. Sorry, I've taken a little bit. You can fast forward if you want to when I get all this shit off my screen. Okay. So basically, guys, we're still in down structure. So we have our 4 pieces of structure to confirm. We're going to make money going downwards. We're going to make money with the market going down, because that's the flow of the market right now. We're in down structure. So in order to profit from it, we need to profit off of supply instead of demand, because we don't want to buy. There's no demand. There's no demand here. There's no market. The market's not going up. So I don't want to buy anything here because there's not any demand for it. And so what I'm going to do is I'm going to look for sell trades, and here's how I do it. Once you have your 4 pieces of market structure, which we have here, so we have our current pieces of market structure, our high, low, then we have previous high, previous low, previous high, previous low, previous high. So we have 4 pieces of structure that confirms us going down, and I'm going to mark it out for you, okay? I'm going to mark it out right now. So we have a low here. These lows are lows we want to see. Lows breaking previous lows. Okay, we need to see 2 of those. And it is in regards to the highs, we see a high right there, and we see another high right there. Okay, you see where I marked it? You guys all see? All right. So what we're gonna do is this is our 4 pieces that confirms the direction on the 30 minute. So that's what I want you guys to start doing structure on the 30-minute time frame. And once we have our structure, we have to look for trades, and we look for trades in our current range. Okay, so even though we have this little tiny piece of structure right here, I would usually mark this whole thing I'm doing right now as the range, but since we have a piece of structure here, I'm just going to go ahead and mark this for now, because this what's it called, this broke a low there on the lower time frame. So this right here with this green, these 3 green lines, if you're wondering what this is called the GAN box tool. You can get it on TradingView. Just look for the tool. It's called the GAN box. And what I'm using this for is basically looking for the equilibrium of price. And I'm not going to make this complicated. What that means is, you see that 0.5 line? So basically what I'm selling, when you want to sell anything, you want to sell it at a higher price rather than sell it at a discount. So because that's where you're going to make the most money in the market. Because if you sell at the bottom, it's just going to go back up, right? Just the same thing with it going up. If you were to take buy trades, you would rather take buy trades at the bottom instead of take buy trades here at the top, where you can potentially lose out and lose all your money, right? You can lose all your money and you're all sad and shit. But we don't want to see that. So what we want to do is identify the current range once we have structure. So we found our structure. The next step is identifying the current range. I know I'm making this longer than it has to be, but I'm just trying to make sure you guys understand. And so right now, I'm identifying the current range, and right now I know I'm looking for sell trades. So I want to look at the top of the range to look for any supply zones, order blocks, fair value gaps, imbalance gaps, which we do see right here. And we also want to look for any Wyckoff, any schematics. That's what I trade. I trade Wyckoff, and I also trade supply and demand. That's the only thing I trade: fair value gaps, imbalance areas, zones, and then I trade schematics. But most people don't know what schematics are or Wyckoff is, so I just say supply and demand. And so right here, if you notice, you see this? We have a little fair value gap right here. At that candle, the gap was right here, and it came through. And then we hit wick to wick right there. And it's funny because we get that after we break a structure. So most people will take a trade after they break their first piece of structure, but for me, I want to see 2 pieces of structure break. So we're going down here, and that's it for going down. So what I'm saying is basically, if we didn't see any of this before, and what I mean by this is I'm going to actually mark it out so I can show you what I mean. If we didn't see any of this, what the black line's pointing to before, then we would want to, we would want to wait for a confirmation. And our confirmation would be all this unhealthy price action above here on the top or on the upper part of the range here, which you can see right here in the second arrow that I'm pointing to. You see all that aggressive black rectangles going downward, that aggressive price action just going downwards, breaking the previous lows. That's breaking our structure, change of character, blah blah blah. That's showing you that the large operators / smart money is in the market, because the only people that can make the market move that drastically is smart money. So that's telling us, that's even confirming what we had before. So we know we're looking for the market to go down. This right here is giving us a confirmation and showing that smart money is in the markets right here. So this right here, where the arrow's pointing to, these black rectangles that broke structure here. Okay, and so after we had that break of structure, we came back up and hit these gaps. So what I would have marked out is that gap. Before this would have happened, I would have marked this gap down. And what I'll do to make this a lot more simple, is I'm actually going to replay this here. I'm just showing you guys an example. All right, so if this didn't happen, okay, and we had our down structure, we would look to take trades at the top of the range. And when you're buying and the market's going up, you take trades at the bottom of the range. So write that down. When you're buying in the market, you take trades on the bottom of the range. When you're selling in the market to make money, you take trades at the top of the range, okay? Now write that down, and that's the method I use. This is the whole system I have, okay? And so since we're selling, what are we doing? We're taking trades at the top of the range, right? And at the top of the range, we're looking for what's called POI. What does that stand for? Points of interest. And these points of interest basically are areas that we're interested in making money so we can get interested in areas of making money so we can profit off of, okay? And those areas are order blocks. Those areas are supply and demand, which we see right here. We see all this supply right here with the black candles. Areas of interest. So we're interested in these areas, okay? So it can be order blocks, supply, fair value gaps, Wyckoff, any of that. And so once you have these areas of interest, you want to mark your zones. So these gray boxes I have here are my zones. And so these are my areas of interest, okay? Then what you want to do is, here's what I do. Now, if you're not familiar with Wyckoff, that's fine. Here's what you're going to do first. Since you're not familiar with Wyckoff and blah, 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 you're actually going to take your trades up here, okay? And what you can do is, here's both of the options you can do. You can actually come up here and wait for price to hit your boxes and don't trade when it hits the box, right? You can wait for a reaction to give you an extra confirmation, okay? You can do that. Or you can wait for it to come up and then just enter once it's actually in your zone, okay? And you can take your entries here or whatever and target some liquidity, which would be like the next area of liquidity. If this was a real trade, the next area of liquidity would be here. You see this? And why is this the next area of liquidity, you ask? Because it's a double bottom and double top. So what I do is when I take profit in Forex, the areas that I take profit are liquidity zones that are double bottoms and double tops, and better known as support and resistance. Okay, so that's those areas that people buy off is the areas that I take profit off of. Okay, and so now we're gonna play and watch the market. Okay, so we hit our area, right? We didn't hit stop loss, and we crashed into TP. 3, 2. Oh, it's right. This is a new market. Well, let's see what actually happens. Let me just stretch this out. I can actually just upload this on my Instagram, so it doesn't matter. So most likely this is going to go back down and go to the liquidity zone. Sorry, the liquidity area right here where you see with those money signs and hit the take profit. And so these are just the simple steps I use when I take trades, guys. Number one is your market structure. When you're looking to take trades in Forex, you want to go on the 30-minute time frame first. The first step is to go on the 30-minute time frame. Then the next step is to go look up, identify your market structure, okay? You want to identify your market structure. The third step, once you identify your market structure, is that you want to identify your points of interest. So once you have your market structure, identify. Oh wait, sorry, I forgot to add the GAN box. I told you guys to get that. You see that little tool with the green line right there in the middle of my screen? It's in the middle of the screen. That green line going horizontally straight through. That's the GAN box tool. So you want to go on TradingView and you want to look up in the tool section, GAN box, and that's for looking at supply. It's to help you understand supply and demand. Okay. Helps you understand supply and demand. Okay? So the fourth step is once you do that, you're going to identify your POIs. And your POI stands for points of interest. Points of interest. And these points of interest are the areas that you're going to look to take trades in. Once you can trade off. You can either trade off of these areas, or you can be safer if you're a real beginner. you can, if you don't have any experience at all, what I would recommend is you actually wait for a reaction off of these zones so you don't lose any money. So what I mean by reaction is wait till it hits your zone and then breaks your box. And I'll show you, I'm actually going to show you that after I finish running this. So 4 POI, points of interest. And then 5th, my Instagram. That's the 5th step. The 5th step is go on my Instagram and follow me at dynasty_wolves. So that's my Instagram. All right. So here's what we're gonna do. Here's the example I wanted to show you guys. So if you were to take a trade here, and you were to wait for, if you wanted to wait for a reaction, what that would look like is this. Say you didn't take a trade here, right? And you're like, okay, I did what you said, right? I waited for them to come to the boxes, and now there's reaction. Your reaction is this. You see how all these black candles basically crashed and took all of these lower lows, probably on a lower time frame. The next area you probably could have took was, for example, this. Once it enters your gray box zones, mark up the lows. Okay, mark up lows for it to break. And then once it breaks structure, that can be your extra confirmation, kind of like we had over here. And so it broke both of these lows, right? You see how this black candle broke the low. Then price came back up and hit another supply zone, an imbalance gap zone right here. Fair value gap zone. Hold on, I'm going to get the arrow. Right here. I know it's kind of messy, guys. So you could have done that, and then you can take a trade from here. So this is pretty dope because this is 2 ways that you can be safe in. But if you're more skilled in the market and you have experience, I would recommend you actually just if you have experience, you can take trades off of those zones if you know they're the right zones and you have your own intuition about it. But if you're kind of a beginner and you want like some security and just step by step, wait for a reaction off of the zones before entering a trade. So what I mean by reaction is wait for 2 structures to break. Wait for the reaction and price to break 2 pieces of structure and 2 lows. So once the lows are broken, it will reveal another fair value gap or the supply zone. And this is the gap right here. You see, I'm gonna line it out. You see this candle right here that I'm pointing to? Not the one, not the arrow. This. I'll put the arrow on it. This right there. So at the end, you see that wick at the candle? This line and this is the imbalance. This line at the bottom, that is the gap in the market. So the market didn't fill this area. It didn't fill this area at all. But then it came back up, filled the area. But normally your stop loss would be the end of the candle that's even telling you the imbalance. So the candle that is the imbalance, your stop loss would be actually right here at the end of that candle that is the imbalance, okay? And if it's a smart money zone, you see how there, instead of candles into that gray box right there, we have lines, we have wicks. That's a further confirmation that you're going on the right path, because that lets you know that it's a tap and go. So the smart money is tapping that area and going. Because when we have smart money trades, we don't really have a lot of drawdown. We just have a tap and go, minimal drawdown, just tap and go. It doesn't hang out in our stop loss is what I'm saying. So it taps into our gray boxes. You don't want candles going into your box. You want wicks going into your zones, and then your trades look like this. So my take profit would be the same area, the liquidity zone. So you could have took profit right there, or you could have entered a trade right there earlier. You could have just, if you're a professional, or if you have some experience, you could have just entered there, and then you could have traded all this all the way. But if you're a beginner and you kind of want to learn supply and demand at first, do what I just said in the video, and then just wait for confirmation and do the second trade. Okay? And here is the steps. So we're at the end of the video. I hope this helped you guys. We're at the end of this video. Here are the steps. 30-minute time frame. Step 2, identify your market structure. Step 3, GAN box, which helps you understand supply and demand. Step 4, POI, points of interest. The gray boxes is the point of interest. So your supply and demand, order blocks, anything you're familiar with. And if you want to know my exact strategy, what I exactly use and more stuff, this is basically it. But if you want to know more, like, okay, so what do you look for, and like stuff like that, and more, and just more in depth, just contact me on Instagram at dynasty_wolves, and we'll talk. I hope you guys have a good weekend. Good week. Just like, subscribe. I'll be making more videos. I haven't been making much, just having some fucking shit going on. But I'm alright, guys. I'll talk to you guys later.